Good afternoon, everyone. Welcome to our YouTube live stream. Thursday. This is known as Trending Thursday. My name is Glenn Tompkins, Senior Instructor here at VectorVest. My pleasure to be here, and I'm glad that you're all here. And I'm looking forward to all of the new people that should be attending today. And if you are new, by all means, type in the room that you are new. In here, everyone can see your type. So make sure, Jay, keep it family friendly. Keep it family friendly. Everyone can see what you put in. So with that all being said, I really want to know who is new here. Good afternoon, Trade Shark. Something tells me that a lot of his baby sharks are in here today. I want to say a big welcome to you guys as well. Jake is here. Jay is here. Trade Shark types in, you're not new, Trade Shark. I know you're not. Paul is here. Not new at all, says Paul. I know. Jake says, hi, Glenn and Joey. By the way, talking about Joey, Joey is my producer who sits side saddle with me. Joey, say hi to everybody.
Hey.
There you go. So he's learning to tell me, when I tell him which words to say, he says it. He's getting better at that. He's the guy that's in the background. Any technical issues that may pop up, he's handling them in the background. Roger says, not new at all anymore. TC is here. He's a baby shark. Welcome to you, TC. And Trade Shark, thank you for bringing some of your baby sharks with you here today. I really, really appreciate it. Daniel is here. He's also a baby shark. Thomas is here, longtime VectorVest subscriber and jockey clubber, but don't do YouTube much. Thomas, if anything, I hope that you will use YouTube specifically for these presentations on Thursday. I think that you're going to be very pleased with the outcome that's here. So Jay is talking to Jake. So with all of that, I'm going to get to the point. Just a real quick synopsis of me. My name is Glenn Tompkins. I'm a senior instructor here at VectorVest. Next month is March. I will have been here for 16 years. Joey, how long have you been here?
In April, I'll start 20.
In April, Joey will have been here for 20 years. So you know what that tells me about this software? That it's something that once you get it to understand and you can use it, it makes money for you. Joey, does it make money for you in the stock market? Joey says, yes, it does. So, you know, I am glad that he said that. I'm glad that I know I've given you my story of how VectorVest turned $1,000 into over $80,000 in about 8 years worth of time. Oh, actually over $90,000 in about 8 years worth of time. So everyone who's new, do you have to have a ton of money to start with VectorVest? The answer to that is no. But keep in mind, VectorVest is not a broker. VectorVest is a stock analysis and portfolio management system. It's designed to help you to make better decisions in the market. VectorVest will help you with your when to buy, your what to buy, and your when to sell, all right? Now, all of that being put to the side, these Trending Thursdays, we utilize the news media to see what stocks are making the news, and we present you with those stocks that are making the news, but then we analyze the stocks in VectorVest. We look at our proprietary indicators, we look at the graph, and we're going to help you to know if it's the right time or not the right time to be in the stock, even though the news is out on the stock. So these presentations help to corroborate the news that is out there on all stocks. But we always start off with market timing. We always start off with market timing. And talking about Tesla is going to be in here today. Trade Shark, so watch that. It's going to be there. Thank you, John. John says VectorVest is the best. Now, let's start off with our market timing. I'm going to put you guys where you need to be. When you open up the VectorVest software, for those of you who don't have a subscription, when you open up the VectorVest software, this is a piece of what you see. VectorVest, we feel that market timing is the most important thing you have to experience. You need to make sure that you're trading with the right side of the market. Is the market bullish, bearish, or neutral? VectorVest will give you that information right at your fingertips when you open the software. Our daily traffic light into the market is our market timing gauge. Currently today, we are one tick into the green. The color guard is mildly bullish, and VectorVest does advocate buying safe, undervalued stocks that are rising in price at this time. So that's for today. Now down below, The market timing gauge gets its color from our top row of lights on the color guard down below. The color guard tracks three of our market timing indicators over the last 6 days. We track the trends of these indicators. The price, which is the price movement of the VectorVest composite. The composite is an indexed arithmetic average of all of the stocks that we track. Currently, right now, we're tracking 8,268 stocks in the market. The closing price or the trading price for it right now is $52.29. We are looking at VectorVest real-time data. So we'll see these prices and indicators change real-time throughout the day. The second indicator, RT, which is one of our core proprietary indicators. RT stands for relative timing. This indicator is cast on a scale between 0 and 2, and above 1 is favorable, below 1 is unfavorable. Relative timing tells me if the market's in an uptrend or not. Above the value of 1, the market's in an uptrend. The higher above 1 it is, the faster in an uptrend it is, and below 1, it would be in a downtrend. Currently, we're at 1.01, so the market is in an uptrend. The BSR, or buy to sell ratio. Every stock in the database gets a buy, a sell, or a hold recommendation every day. We look at that relationship. Currently, we still have right now, out of the over 8,200 stocks, 1,600 stocks have buy recommendations, 1,300 stocks have sell recommendations. Because we have more buy recommendations than sell recommendations in the software, that buy to sell ratio is above the value of 1. This indicator looks at the overall health of the market. With more buys in the system than sells, the market is showing signs of strength. When this indicator falls below the value of 1 like it did earlier in the previous trading sessions, that means we then had more sells in the system than buys, and the market was showing signs of weakness. We're the only people out there that have an indicator that look at the overall health of the market. All right, so with this, we teach you, use the color guard like you would a traffic light. We get these colors by tracking their week over week and day over day moves on each one of these indicators. Currently, we still have more yellow lights in the market or in our color guard than anything. So with that being said, even though it's okay to be bullish, you need to be cautiously bullish. Without software like VectorVest, you could just be full bore bullish and not understand the risks of being full on bullish at the wrong time. The market has got more of a bullish feel, but we've got more yellow lights. Be careful with that. All right, and then our slowest, most conservative call, we are still in a confirmed up call right now. Now, with all of that, let's talk about the 3 things that move markets globally. The 3 things that move markets globally are earnings, interest, and inflation. Now, what's big in the news right now? Type it in the room. What's big in the news that it's affecting the market right now? And it's got two letters, but it's 2 things. Anybody, type it in the room. What's the big thing moving the market right now? By the way, while you're answering the question, here's my Duke Blue Devil Cup. I know Trade Shark doesn't like that. Stevie does. Joey doesn't like that as well. Nope, there is. There you go. It is the virus, Badger. By the way, Badger, I'll come back to you in a second. But it is the coronavirus. Quantitative easing. Daniel, I'm not going to call quantitative easing more so than the fluctuation of inflation of interest rates. So the 3 things that move markets globally are earnings, interest, and inflation. But the coronavirus is a news story, and it's affecting people emotionally. All right, affecting people emotionally. Trade Shark, we're not getting into this today. Not here. And Jake, you know I'm not talking politics in here, so I won't do that. All right, so now, understanding where we stand as far as the market goes, I'm now going to open up a story. Our first story is going to talk about what's going on with the Fed and what they're doing. Is this the right one, Joey? Yeah. All right. My first story, I got it. My first story is talking about the central banks. All right, remember, earning interest and inflation. Where do the central banks come in? For interest rates, right? The central banks adopt a cautious outlook on the coronavirus. After engineering major policy reversals last year, many officials are taking a wait-and-see stance due to the coronavirus. Central bankers are adopting a cautious stance as they consider how the coronavirus outbreak in China could ripple through the global economy in coming months. Why is that? And people have been asking me, how does the coronavirus affect the economy? Keep in mind, if they can't get stuff out of China because a lot of commerce is shut down, it's going to affect their economy, which is going to affect everybody else's economy if they can't get stuff out of China out to the places that they export to, right? So that is why the coronavirus is affecting the market. I'm going to have another story. The Fed officials weigh risks of COVID-19. This has gotten to a point now that the coronavirus has an official name by way of the World Health Organization, COVID-19. Two regional Fed Reserve officials said Tuesday that the novel coronavirus, which causes the illness known as COVID-19 in China, was casting uncertainty over the U.S. outlook. Again, folks, these are the people that play a big role in what goes on and how our economy is gauged. With one official hinting that the worst case scenario might call for lower short-term interest rates. Ta-da! Ding, 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 ding. There you go. So, the Fed is looking at this. The coronavirus is still big news, but what did I say? There are three things that move markets globally: earnings, interest, and inflation. And how about now, because of the coronavirus, it might call for lower short-term interest rates. It then moves from a story to one of the global movers of the market. So I'm tying those two in together. And with that being said, let's go take a look at two indicators that we use for the health of the market or what the market is doing. I'm going to get us back into the VectorVest software, and I'm going to pull up a graph. Oh, how I want to do this? I'm going to start here. I'm going to pull up a market timing graph. Now, the market timing graph, remember that VectorVest composite I talked about, the price of the VectorVest composite? Well, this is what it is shown here in a graph. Because we track over 8,200 stocks, we can truly see when the market's moving up and when the market's moving down and when the market is moving sideways. This is why we use it for markets affecting me. Team? Okay. So I'm going to probably see that it's reconnection. All right, am I back? Take this, close that out.
Yeah, but it looked like it took VectorVest and everything down.
Oh, did it? Can you guys hear me? To everyone watching, please help us continue. All right. Oh, you can hear me, right? So I'm talking to myself, and no, it says I'm back. All right, everybody says I'm back. Phew. Joey's saying refresh your screen, please, if you're not hearing me. All right. So I'm glad that you guys can still see me. Thank you, Joey, for being in the background doing what you do. Yep. My hat's off to you. I got no hat, but it's off to you anyway. So the VectorVest composite, even with today's activity, nice open candle. All right. You know, we have a hashtag out there, hashtag keep eye on MTI. This indicator let us know precursorily, I like that word, precursorily, that when this indicator got to the level of about 1.5 to be prepared for a pullback, how about that came into fruition? So any of you who do not have the VectorVest software, we do have an indicator that shows you when the market is looking for a top or when the market is looking for a bottom. And how about that was right in line as the market was going up prior to that pullback. So I'm going to add another stock real quick. I'm going to add the spiders, the SPY. All right, let's go take a look at it. Now, and the reason why I put on the spiders is because if you don't know much about the VectorVest composite, the spiders looks at the S&P 500. More people are understanding of those kinds of stocks. Look at that. Still hitting historically new highs today. Nice open candle in the S&P 500 or the spiders. New high, very little wick at the top. Market is showing really good signs of strength. I want to show you something though. Volume is conviction. You notice how the market is going up. I want to show you something. Look at the volume. Look at the volume on the market. All right, could be a bearish indicator. All right, it could be a bearish divergence. I'm not trying to be the speaker of doom and gloom, but I'm bringing to the forefront, looking at volume on the S&P 500 while the market is moving up by way of the S&P 500. Look at the volume. All right, so nothing else. Keep your eye on what's going on. Just keep your eye on what's going on. That could be a possible bearish divergence as far as volume and the spiders is concerned. All right, let me close out of this. Do I want to close out of this? I probably don't want to. All right, so that's what's going on with the market. Does anybody have any questions? All right, anybody have any questions? And actually, I should have jumped back into something, but I'll come back to that in a second. All right, if nobody has any questions, I'm going to open back up to the VectorVest software, and I'm going to go to our watch list of stocks. Go to the Viewers tab, and the stocks that we're going to talk about today are in a watch list for you. Let's go to Trending Thursday. Let's go find 213. I'm going to put one more piece to that market segment. So we talked about the coronavirus affecting what's going on in the market. We do have a list of coronavirus stocks. All right, if I open that up, they are, and I created this list, I believe that there's 12 or 14 stocks in here. And I want to show you, we've been talking about the coronavirus for a minute. Here's 14 stocks, whether good or bad, that deal with the coronavirus, sorted by our master indicator, VST. I'm going to take this back to last week. Remember we talked about the coronavirus last week? Watch this. Here's the stocks listed by our master indicator, VST, as of last week. I'm going to do a quick test of the top 10 stocks. All right, to do a quick test of the top 10 stocks. Look at that. Look at that. 5 winners, 5 losers. But GNPX went up 74%. That's in 1 week. So we give you these watch lists to take a look at. We've taught you over and over again how to look at a graph to determine breakouts on a graph, which stocks are starting to pull up from a standpoint of cherry picking. But look at that, 4.93% in 1 week on coronavirus stocks. And that's GNPX went from $1.33 up to $2.31. Almost, what is that? Almost a full dollar in 1 week. All right, so keeping that in mind, these stories that we talk about, these lists that we have, they do work. All right, let's get into our next story. Our next story is going to talk about social media. So I was doing some work on trying to always find my stocks for the upcoming week. Social media was a buzz. Snap versus Pinterest. Which stock is a better buy? With the largest U.S. social media companies coming under more intense regulatory scrutiny, investors in the digital space are looking to diversify their investments and take some exposure to small stocks which don't carry antitrust risk. In this group, we have a short list, Snap and Pinterest, to analyze their current earnings momentum and the possible risks that come with their small size. And we're going to take a deeper look, but we're going to use the VectorVest software to do so. Another social media stock, Zoom. Now, Zoom is something that's sort of like FaceTime, but you get a group of people that get together on cameras, and they're all together there. It's sort of like, again, a FaceTime with a whole bunch of people. As a DJ, one of my Facebook site, we use this. Zoom vaulted 14.9%, and this was on February 3rd. In today's trade for the best one-day showing since June, as analysts say the coronavirus fears appear to drive investors towards video conferencing stock. How about that? So another way how the coronavirus is affecting the market is possibly on social media. Because of the coronavirus, people are talking about it on social media. Let's go over to Twitter. Twitter accelerating user growth will push stock to new highs. Twitter has blowout user growth reaching 20%, 21%. That's a lot of people on social media for quarter 4. The company is still struggling to monetize the accelerating user growth with only 11% revenue growth in the quarter. So as they're growing, they're having a hard time getting to capture profits or make money on them. I'm not sure what it is. Now, Cool Hand Luke, I'm going to get to that in a second. The stock is attractively priced at forward earnings multiple of 6.7. So we're going to take a look at Twitter. Let's go to Facebook, because interesting that a question came up about a stock being valued at $8. I'm going to talk about that in 1 second, because understanding the value on the stock is what we feel that it's worth. All right, it's not a target price or anything. It's what it feels that it's worth. And it's looking at things like earnings and earnings growth rate to determine what the value is on any stock. Now, this one, Facebook, WhatsApp hits 2 billion user milestone. Man, and you know what though? That's about 500 million shy of Facebook's monthly active users. Man, WhatsApp is kicking it. Carter Hall, which is the CEO, Journal WhatsApp would continue to operate largely independent of its parent company. So even though it's under Facebook, it is on its own. Facebook left it on its own entity. And man, are they kicking butt and taking names. All right, they are kicking butt and taking names. So Facebook, and let's go take a look at those stocks, all right? So I brought up the stories on those social media stocks. Let's go bring up those stocks in my list. Here's the list. We're gonna look at about 14 stocks, actually 12, because 2 of them were the, oops, wrong one. Let's go to mine, back. There we go. So we have 16 stocks today. We're going to say it's 14 because 2 of the stocks in here were the spiders and the VectorVest composite. So let's go look at those social media stocks. Facebook, take a look at Zoom, take a look at Pinterest, take a look at Snap. Was there another one? How many do I have? 1, 2, 3, 4. I'm missing one. Twitter. There we go. So let's analyze these stocks real quick. Let's analyze them real quick. Facebook, at a price of $210, value of $242, nicely undervalued. Remember, our mantra is to have you in safe, undervalued stocks that are rising in price at this time. Now, so someone asked me and said, man, one of these stocks are at 8% or valued at $8. Let me tell you, Zoom is trading at $87.26. VectorVest has it valued at $8.36. So what does that mean? Well, that means that we feel the stock is only worth $8.36, especially dealing with earnings and with their earnings growth rate. Here's their earnings growth rate at 19%, which is great. Their earnings per share is 29 cents on a $87 stock. All right, so they are growing it at a clip of 19% a year. And if we're going to go take a deeper look at it, I want to show you something. Utilizing our proprietary indicators, RV, which looks at the stock's long-term price appreciation. Right now, Zoom, based on all of these are based on a scale between 0 and 2. Zoom is below the value of 1. Long-term. I wouldn't, and I got to stream this. Let me, I did look at that. Let's do this again. Thank you for that. Let's go find Facebook. I was back in time. I did that, sorry. Zoom, Pinterest, Twitter, Snap. All right. Facebook, still undervalued. Zoom, still over its value. Because it's overvalued, it means that people are willing to pay a premium to own the stock. Now, that long-term price appreciation is below the value of 1 and way below the value of 1. Zoom right now is not a stock that I want to hold for the long term. The next fundamental indicator, relative safety, below the value of 1 is 0.73. Relative safety looks at the stock's consistency and predictability of company financial performance. Does this company meet or exceed its earnings expectations year over year, quarter over quarter? I'm going to tell you that when earnings comes out, most likely the stock may or may not meet its earnings expectations. What drives a person to buy a stock? Stocks that consistently go up in price. Stocks that consistently go up in price are stocks that consistently meet or exceed their earnings expectation. Now, I will tell you this, though. RT, which is our technical indicator, looks at the short-term price trend of the stock, cast on a scale between 0 and 2, nicely above 1. This stock is moving up right now. So, the stock is overvalued, no good upside potential. The safety or risk of the stock is high. Not good, safe stock, and the risk is high, but the stock is moving up. Based on this analysis, I can tell you that this is more of a trading stock. Pinterest, also over its value. Upside potential, not there. Safety, not there. But the stock is in an uptrend. This is more of a trading stock. Twitter, 37.24 above its value. Notice that the only one that I can see in this list from social media that is an undervalued stock is Facebook. So if I'm looking at any of these stocks to take a look at, let's right click. Let's view the stock graph. Let's start from here. Looking at Facebook, I like the upward move. I'm going to draw a trend line from the lows, connecting the lows. Oh, really? Connecting the lows. Stock is in an uptrend. Let me make that a little darker so you can see it. Stock is currently in an uptrend, pulled back to this level of support or a level of a trend, moving up. Nice upward move today. Let's put it on a 3-month graph. I like the earnings per share. Definitely higher than it was 3 months ago. Volume is okay, pretty much capping out at about 10 million shares per day. But nice open candle. I'm using 3 and 8 exponential moving averages. How about today they crossed? Not only that, the stock is back to a buy recommendation in the software. Let's go to the next one. Next one is Zoom. So even though I said that Zoom is more of a trading stock, the 3 and the 8 crossed back here. Let's go look at that. Crossed back here on 1/30 of 2020. Earnings is higher than it was 3 months ago, but I do understand based on the fundamentals that it's not a fundamentally sound stock. Doesn't mean you can't buy it. Looking at the 3 and 8 exponential moving average, where's the stock's price stopping right now? Right at resistance. There's that resistance level of $93.09. VectorVest will automatically draw resistance and support for you. It recently broke through 2 levels of resistance, now approaching a third. But the stock, nice open day, a little bit of wick at the top, but nonetheless, if you're in it, leave it alone. But I now know because it's more of a trading stock, I will adjust my stops on that stock. Next stock, Pinterest. Look at it, falling down. 3 and 8 close to crossing. Volume is pairing off. Earnings is higher than it was 3 months ago, but they have negative earnings right now. Next one, Twitter. Nicely moving higher, like that the earnings is on the rise, but still lower than it was 3 months ago. Open candle today, the 3 and the 8, even on the pullback on Twitter, kept you in the stock. But again, I know that fundamentally sound is not there, but Twitter is moving at this time. And the last stock, Snap. Woo! Look at that. Snap, the 3 and the 8 crossed to the downside on 1/31 of 2020. Would you rather get out here if you got in here to capture your profits or wait for it to rebound? So this is why we use moving average crossovers. Whatever moving averages you're comfortable with, you use. But use some semblance of moving average crossovers. And there it is. That getting out on that 3-8 crossover there would have saved you from this big down day, which created a level of support sitting at $16.08. All right, anybody have any questions? Warren Buffett would turn in his grave if he were dead if you bought that Zoom. Listen, I want to tell you that as we look at these stocks, some of these stocks are trades. Some of these stocks are longer-term investments. This is why analyzing the stocks through VectorVest helps to give you a better perspective on which it is. Is it a trade or is it a longer-term investment? So Cool Hand Luke, I'm with you on that. All right, I'm with you on that. Worst YouTube video ever. Wow, sorry about that, BT. Well, anyway, how overrated is Duke? Well, really? All right, let's go to my next story. I'm looking at some coffee stocks. Luckin was a stock that was out there on the web as a hot stock to take a look at. All right, as a hot stock to take a look at. Luckin Coffee in Yum, China, hit again by the coronavirus. Notice how the coronavirus is coming up again, even in the individual stocks we're looking at. They both break lower. This was on February 7th after a new report on the rapid spreading of the coronavirus on this cruise ship quarantine in Japan. Analysts think the fear of being out in public in China needs to fade before Luckin and Yum China can retrace their drops from the last 4 weeks. That's one coffee company. Watch this. Dunkin' shutters half its China donut ice cream shops in China. Dunkin' brand shutters half its China donut ice cream shops, and that's because of what's going on during the outbreak of the coronavirus. Another coffee company, Starbucks. New concepts expected to boost Starbucks. While most of the attention on the coffee chain over the last week has been on the impact of the coronavirus on the store traffic in Asia, reports out of Chicago continue to indicate the new Starbucks roastery on the Magnificent Mile continues to see huge traffic. All right, how cool is that? And Cafe Bustelo, no Mary, I don't have Cafe Bustelo. Roasteries are a critical piece of Starbucks' increasingly diversified portfolio, one that also includes traditional stores and pickup-only store in New York that lets customers order in advance and pick on their phones and pick up their orders without the wait. All right, so 3 different coffee companies, and again, it started out with Luckin because they are in China. Let's go open up the watch list again. Let's go pull up my 3 coffee companies. We're going to look at Starbucks, we're going to look at Dunkin', and we're going to look at Luckin Coffee. Right now, Starbucks, slightly overvalued, trading at $90 and a value of $64. But look at the upside potential with relative value. Look at the relative safety. Both of these fundamental indicators are above the value of 1. So you know something, Starbucks may be a trade that I would hold for the longer term, and RT is above 1. Now, because the stock is overvalued, again, that means people are willing to pay a premium to own the stock. And it's a buy recommendation. Dunkin' Donuts, on the other hand, also a little bit overvalued by $10. Good upside potential, not as good as Starbucks. Good safety, not as good as Starbucks, but fundamentally sound as both indicators are above the value of 1. What's hurting it? The stock is not in an uptrend because RT is not above 1. Telling me that the stock is pretty flat right now. Telling me that the stock is pretty flat right now, and it's a hold recommendation. Let's go down to Luckin Coffee, way over its value. Remember though, this is like the Starbucks of China. That's what this is. This is more of the Starbucks of China. At $38, trading at $38 with a value of $4.24. The long-term upside potential, not there, whereas relative value is below 1. The safety factor, not there, relative safety below the value of 1. What's helping it though? RT shows me that the stock is in an uptrend and also a hold recommended stock. So as I analyze these stocks, I can still get a feel. Out of these 3 stocks, I can see that Starbucks is probably the best by way of analysis, then Dunkin', and then Luckin Coffee. Let's go take a look at all 3 stocks on a graph though. Let's pop them up. There's Starbucks. Starbucks is a little bit of a channel. I'm going to take off the last close. I'm going to throw on a horizontal line real quick. That's a good level of support. Let's highlight that right there. That's a good level of support, and it already created a level of resistance. Right now, put this on a 3-month graph. The 3 and the 8, what just happened? Oh, that's why. Click on OK. The 3 and the 8 on the stock have recently crossed a day ago. So with that being said, the stock does have a price target now of about, let's go put on what my level of resistance at, about $93.58, unless it can break through that level of resistance. But I like that it formed a level, another level of support right here as it dropped. Now moving higher, the 3 and the 8 have crossed, earnings higher than it was 3 months ago. Ooh, watch the volume though. Watch that volume as volume is starting to fade off as the stock is moving higher. Just keep your eye on it. Not telling you not to buy it. I am letting you know that volume is conviction. I'm not feeling real convicted on the stock's price moving up right now. Let's go to the next stock, which is Dunkin' Donuts. Fell hard. Notice that with Starbucks, it's in a channel. It fell, but now is rebounding. Looking at Dunkin' Donuts, the rebound is not there yet. What is the difference between value and relative value? Value is what we feel the stock is currently worth. Relative value looks at the stock's long-term price appreciation potential, its long-term upside move as compared to an alternative investment as like in a AAA corporate bond. So when I look at relative value above the value of 1, the more it is above the value of 1, it means it's a higher percentage that holding this stock will outperform the safer investment in a AAA corporate bond. But value is what we feel the stock is worth, and we want you technically to be in a stock that is undervalued, all right? Undervalued. Can you mention donuts after the pretend? No, no donuts. Nope. All right, let's go to the next stock, which is Luckin Coffee. In a little bit of a channel. Even looking over the last 3 months, the stock mostly has been in a channel. If I'm going to think about getting into this stock, I would wait until it breaks above that level of resistance before I pull the trigger. Watch the earnings though. Earnings may be higher than it was 3 months ago, but their earnings are negative. They are not making money. All right, that's another reason why a stock could be overvalued. When you're looking at stocks, the earnings or the earnings growth rate. The earnings growth rate is sitting at 23% a year, but even with that, they still are not making money, and that's important. Can you say what valuation method is based on? I said that the valuation, what we say and what a stock is worth, is looking at the stock's earnings and the stock's earnings growth rate. The stock's earnings and the stock's earnings growth rate is how we look at calculating what a stock is worth. All right, what a stock is worth. All right, let's go. Anybody have any question on my 3 coffee stocks? Anybody have any questions on my 3 coffee stocks? Krispy Kreme would go good. You know, I'm not sure if I have, there is a ticker symbol, but Krispy Kreme is more so known for their donuts more than their coffee. Even I can say that about Dunkin' Donuts, but they are also known for their coffee as well. Now you're talking about coffee, so Joey has something to go with his donuts. Wow, Joey, they're really getting on you today. All right, let's go to my next story today. Wow, Joey's getting it good today. Now, let's get into gaming stocks. I got 3 gaming stocks that have made the news. AMD, all right, raised on potential market share gains. RBC Capital Markets maintains an outperform rating for AMD and lifts the target by $10 to $63. All right, analyst Mitch Steves thinks that the PC share gains will continue to move into the mid 20% market share range, and he has higher conviction in servers through 2020 to 2021. All right, let's talk about another gaming stock, Nvidia. And you know, Nvidia and AMD and Micron all battle for that space in the gaming industry. Nvidia says, though, it's pulling Activision's games from GeForce Now streaming service. Said late Tuesday that it would be yanking Activision, Blizzard. Anybody played World of Warcraft? I played did you ever play World of Warcraft? World of Warcraft, way back in the day with VectorVest, we had a lot of people here that played World of Warcraft, but that's Blizzard. All right, it's going to pull those titles from its GeForce Now game streaming service at Activision's request. Interesting. While unfortunate, we hope to work together with Activision's Blizzard to re-enable these games and more in the future, Nvidia said in a blog post. All right, so that's the second stock in the gaming industry. And then I'm also going to go to Micron, upgraded on improving demand. Raymond James upgrades Micron from market perform to strong buy with a $70 price target. Analyst Chris Casso thinks supply-demand conditions are highly likely to improve further as the year progresses and that inventory levels are approaching normalized levels. All right, so now with that being said, let's get back into the software. Let's bring up those stocks, Nvidia, Micron, and AMD. Now, I want you to know that these stocks are sorted by our master indicator VST. Notice how these gaming stocks are toward the top of the list automatically. Let's reconnected. All right, want to see if you guys can hear me again. I apologize for that. Joey's working on it. Joey is working on it.
Yeah, it's back, but everybody's probably going to have to refresh. You're back on, so.
All right, so there we go. We are good to go. We're good to go. So these 3 stocks, 3 out of the top 6 stocks or so are on the top of the list sorted by our master indicator, VST. All right, so AMD is slightly overvalued. Good upside potential, good safety, and moving up in price. Nvidia, on the other hand, a little bit more overvalued, but look at the upside potential on Nvidia. Not nearly as good as it is with AMD, but the safety is there. The stock consistently meets or exceeds their financial performance. So that means they tend to meet or exceed their earnings, and the stock is moving up in price. Now, interesting, as I look at Nvidia, look at their earnings growth rate. A 1% a year, where AMD grows their earnings at a clip of 30% a year. Micron, Also overvalued. So all three of these stocks are overvalued. The upside potential on MU or Micron is at 49, below the value of 1. This stock should underperform even Nvidia over the longer term. The safety is there for all three stocks. The safety is there for all three stocks, and the timing is there. I just would be a little leery about Nvidia and Micron, especially because of the upside potential. But all three of these stocks, because they are going up in price, and also look at Micron, they got an earnings growth rate of negative 9%. So the worst out of the three. Let's go take a look at their graphs. A couple of them would be more trades, but look at the graph on Nvidia. Good, Gordon Jim, look at that graph. All right. Nicely moving high. Where is it stopping right now? Right at a level of resistance. Right at a level of resistance. Earnings are starting to fall, but still higher than it was 3 months ago. Watch the volume. Volume is okay, starting to pull back a little bit, but look at that stock's price really moving higher. Put this on a 6-month graph. That's an excellent looking stock. That's a beautiful looking stock. Now let's compare that to MU. Notice that MU is moving higher, or Micron is moving higher, but look at the jaggicity of the equity curve. Whereas look at the less jaggicity on Nvidia. All right, so Micron, as I go back to it, watch that. Anybody know what that candlestick pattern right there is known as? That's known as a shooting star, and the stock's price has not been able to take out that high from yesterday. That was hitting a new 6-month high on Micron. That is a possible bearish reversal pattern. Look at the earnings per share. All right. Why are you saying Nvidia is reaching resistance? Where is it at? All right. So Andrea, look at where it's going. So now a high automatically creates a level of resistance, but look at where the closing prices are for the last 3 days. I want to zoom in real quick because that's a really good question, Andrea. All right. Look at the last 3 days. Look at where the wick was here at a high price of 272.50. What's the close price here? Close price here is 270.54. What's the trading price right now? 272.69. Andrea, that is creating a level of resistance. 3 solid days where the price is right near each other. Does that make sense, Andrea? Does that make sense? So that is the reason why I say that Nvidia is reaching a level of resistance right now. Now, TradeSark says Nvidia is going higher. All right, you know me. I will never prognosticate what's going to go on with a stock. What I do is play the stock as it is. And you know something? If you want to jump on board with the stock, I'm going to tell you to put in your order 12 cents higher than the high. All right, so TradeShark, you feel that it's going to move higher? I'm not going to disagree with you, nor will I agree with you. But if you feel that way, let me help you out. Make sure you're buying into a rising stock and not just saying, well, I know it's going to go higher. Make sure you got the confirmation of the stock moving higher before you pull the trigger. Polaris says earnings today. Well, you know something? If you own the stock. Now, let's go back to Nvidia in a second. Let's go back to Nvidia in a second. The last one is AMD. I do like the move on AMD. Also at a level of resistance. I'd like to see the stock take out 12 cents higher than the high. Love the earnings per share. The volume is pretty good. Let's go back to Nvidia. Nvidia, you see what that relative safety is on it? 1.42. The stock is going to have a very high possibility of breaking through and keep moving higher. All right, because it's probably going to meet earnings. What's the thing that can stop it from moving higher? If the stock doesn't have good forward guidance. So the stock can beat earnings and still fall because of bad guidance. I don't like that the earnings growth rate is at 1%. All right, the stock is a good looking stock with the exception of the relative value, telling me that the upside potential that a AAA corporate bond most likely will outperform Nvidia over the next 1 to 3 years. All right, with that being said, does anybody have any other questions? Dang, Glenn, Shark talks so highly of you too. Well, you know, I appreciate that. All right, so... and I like the idea of if you feel that the stock is going to go up, that Nvidia, what was it, Nvidia, if Nvidia is going to go up, buy calls. I like that idea. Can you take a look at ENPH? Ahmed, I'm going to give you an opportunity to take a look at individual stocks in a minute. All right, I'm going to do that. Let's get to my last story. My last 3 stories actually are about 3 stocks that have made news. Tesla. Tesla, I told you I'd get to that trade shark. Tesla rises on Shanghai factory optimism. What to watch now? Tesla's wild swings are apparently far from over. Notice how, again, all of this stuff comes back to the coronavirus and what's going on in China. The electric car maker's stock climbed 3% on Mondays after Shanghai's municipal government said it would help companies, including Tesla, get their operations back up and running again after what? Coronavirus-related suspensions. Man, it's affecting everybody, and most recently, Tesla just beat earnings as well. Beyond Meat, getting into chicken, talked about that last week, but Beyond Meat represents a 40% downside amid growing competition. The recent price appreciation of Beyond Meat stock has no real fundamental backing. We're going to take a look at that. The increased competition for the Fox meat category will make it harder for the company to show triple-digit growth, and our discounted cash flow model shows that Beyond Meat stock is overvalued by more than 40%. So that's a story. Let's let the VectorVest software analyze it for us a little better. And the last thing, Shopify also beat earnings. Shopify stock is soaring because earnings blew past the expectation. Shopify stock is trading sharply higher Wednesday after the Ottawa-based e-commerce software provider posted a better than expected fourth quarter results. Let's get into the stocks. All right, so these are my last three stocks. These are stocks that are just making news. Notice that two of these stocks are amongst my leaders in my list sorted by VST. So Shopify, Tesla, and what was the last one? What was it, Joey? Oh, it's on my list. Beyond Meat. Where's that at? There it is. All right, Shopify, way over its value. Wow, way over its value. Upside potential, not there as well. But that doesn't mean that you don't buy the stock. All right, you don't mean that you don't buy the stock. It means that there's a high perception about Shopify, and they're willing to pay a premium to own it. The safety is there, and the stock is moving up in price. How about Shopify is growing their earnings at a clip of 33% a year? Tesla, also way overvalued, and it's always been since the time that they've come out. All right, how about their earnings per share sitting at $5.91? Upside potential is there on Tesla. All right, so the stock's got good upside potential. It's a safe stock. RT tells me that it's going up in price, and that buy recommendation is in place, and they're growing their earnings by 34% a year. Beyond Meat, way over its value. Do you know why there's so many overvalued stocks in the market? All right, do you know why there's so many stocks in the market, overvalued stocks? What's not happening? Banks are not paying interest. Where are people going to put money? Money goes where money grows. If I'm going to put my money in the bank, am I going to get any return on it? The answer is with low interest rates, no. So money is going into the market, even if it's begrudgingly. People are putting their money in the market because that's the only place that they can see their money growing. This is why a lot of the stocks that you see in the software or in the market in general are overvalued. I want to put that out there. All right, so just keep that in mind. Beyond Meat, overvalued. Upside potential, not there. Fundamentally, this stock is not sound. All right. Shop split, I think that I'm not sure. I'll have to check that real quick. I will find out and check that out real quick. Thereby, bubble is brewing, be warned. All I'm telling you is that there is an overvaluation of stocks because there's so much money in the stock market. Nobody is saving it. Nobody's putting it in the bank. And Cool Hand Luke thinks that it's a possible bubble brewing. Again, I won't talk about what I don't know. Let's take a look at these graphs real quick. View the stock graph. Shopify, look at that. Even after the earnings, what happened? A lot of give back. Look at that. That's a green candle, but it's closed, which means the price started at the top of the candle and came down. This stock gapped up, went up as high as $593.89, and look at that pullback. And with today's activity, we got a little bit of a shooting star. We got a little bit of gravestone doji, which could mean a possible bearish reversal on Shopify. How do I know that that's probably going to happen? Look at the earnings per share. Look at that earnings per share as the stock's price is going up. Another form of a bearish divergence. Holy smokes, another form of a bearish divergence. Let's look at the next stock, Tesla. Tesla is rocking and rolling. I love that on the pullback on Tesla, the 3 and the 8 still kept its form. They did not cross bearish. Love the open candle today. A little bit of a wick at the top, but overall, nice looking equity curve. Look at that nice looking equity curve. Nice up day today. Stock is a buy recommendation. And how about today's volume went back above the average volume of on volume. And last but not least, Beyond Meat. Beyond Meat had some problem after it got, look at that. I made some money on it. I made a lot of money on it. I doubled my money in about 2 months on Beyond Meat in the first initial rising. Look at the pullback. So when we talk about earnings on a stock and how low it is, you will find that for the most part, a stock's price will fall when earnings are low, all right? Notice that the earnings are starting to bump up now. The stock's price is starting to move up. It is not a direct correlation overall, especially when we look at value though. I could put value on here and see that the stock is way over its value. There's the value line. Let me go make that a little darker just so that you can see it, change the style. Let's make that a little darker. There's the value. This stock is way over its value. Way over its value. And what we try to say is that over the next 1 to 3 years, price and value will meet. If the stock is overvalued, the stock's price most likely will tend to fall to meet its value. All right, so those are the 3 stocks that are making the news. Anybody have any questions? Anybody have any questions? Because if you don't, I'm going to make one observation here before we get started with looking at your own stocks. Notice that we have a watch list value of all of the stocks at the bottom of the list. All right. I can see what the average upside potential on these 16 stocks are. Below the value of 1. But I can see for the most part that these stocks are more safe. And I can look at right now for the most part that most of these stocks are going up in value. So if I look at these, I can see that this is more of a trading watch list of stocks, more of a trading watch list of stocks. All right, so before you start to put them in, Eatery is brand new. Hopefully, any of you guys who are new, hopefully you got an opportunity to get something out of this. And if you did, let me know. As you're doing that, I'm going to type in some of the stocks that you're typing in already. TNDM, Shop we already looked at, Beyond we already looked at. FOMO, is that really a stock? Who's that? It's not? See, look at that. I just got caught out there. All right, put him in timeout for me. Beyond we looked at, Shop we looked at, Microsoft, MSFT, Apple, AAPL, GNPX. That is a coronavirus stock, OESX, TNP, I really want stocks from brand new people who haven't been here before. SBGL, I really want to accommodate them. So Andrea is new, DKS. Not that I want to call them, fear of missing out. That's what I thought it was. I don't want to cut out my normal people, but I do want to make sure that my new people that are here, Delta, what is that? I can find it. Delta, which is DAL. Excellent. DAL. I do want the new people to get a chance to shine a little bit in here. William, LRCX, Dov, COST, which is Costco. Did I miss anybody? Ghislaine. That's not a real shark. Eatery. All right, hold on. What does that say? Okay. STM. I need that back. There we go. STM, there you go. What is, I don't know what that is either. All right, looks like I'm getting there. Wow, Eatery, that's a lot of stocks. That's too many stocks to put in all at once. But I will look at a couple of them. TNDM, I think that's already in my list. It is, I thought it was. Let's go back and let's go take a look at these. Oh, come on. There we go. Take a look at these. There we go. All right. Come join our room and we'll have fun. There you go. Let's start off on a 3-month graph. Tandem Diabetes. This is a stock that I like close to my heart because I do have diabetes. I'm going to take off the last close. Look at the stock's price moving up. I do like the earnings per share is higher than it was 3 months ago. Watch the volume though. Remember, volume is conviction. Be careful with the volume. Stock's price is moving up, hit a new high over the last 3 months. Nice open candle. I do like that. I do like that. If I'm going to pull the trigger on the trade, I need to be at least 12 cents higher than where it is right now. Let's go to the next stock, Microsoft. Nicely moving higher, pulling back right now. If I'm trading Microsoft right now and I'm looking at the 3 and the 8, I'm fine. Let's take off the value. I'm still fine with the stock right now. On an end of day basis, if the 3 crosses below the 8, if the 3 crosses below the 8 on an end of day basis, you might want to consider taking that trade off the table. All right? You might want to think about taking that trade off the table, but if you're in it now, leave it alone. If you're not in it, I would really like to see the stock take out the high before I jump on, because I want to make sure I'm buying into a rising stock, all right? Keep that in mind. Volume is really good. It's pretty steady. And I love the earnings per share. Next one, Apple. What is it doing right now? Apple has hit all-time highs as well. Where's it at? Resistance. It's at resistance. VectorVest will draw your support and resistance lines for you automatically. The stock is not only at resistance, it's in a channel, but it's at the high end of the channel. I do like the 3 and 8. If I'm not in it right now, I'd have to put my order in 12 cents higher than this 327.85 level of resistance. That makes sure I'm buying into a rising stock. And actually, 2 things I'm looking for. I'll actually look at on an end of day basis for the stock to break through that level of resistance and have a follow through. Breakthrough with follow through before I pull the trigger on Apple right now. Right now, the stock has been hitting beautifully new highs. It's leveling out right now. Let's go to the next stock. Man, GNPX. This is one of those coronavirus stocks. Remember I just showed it to you in that watch list, how much it's going up? Nice open candle, broke through a level of resistance, big open candle, but understand with a lower dollar stock, what goes up must come down. More volatile these lower dollar stocks are. Be careful with it if you're not in it already. Be careful with it if you're not in it already, because as quickly as it can go up, look at that pullback. 1, 2, 3, 4, 5 days in a row after the stock jumped up, ran up to that level of resistance and pulled back down. Be careful with that. Nice up day today, but a lot of the move has already been made. You probably want to wait for a pullback before you pull the trigger on these. Do you use the defaults for support and resistance? Andrea, I tend to use a different setup. Let me go change the settings, but I am currently using the default setups of 100 bars. I like using the 100 bars personally. I like using the 100 bars personally, and I still, why? Because it looks back about 90 days. As a swing trader, I like looking back 90 days to make a decision. Nonetheless, though, the stock's price is bumped up tremendously, but what goes up must come down. All right, let's go to the next stock. Said Billy Preston's song. Keep it. I love Billy Preston. Love the equity curve on this stock. Look at that. Electrical equipment. Love the equity curve. Nice up day today. Look at the 3 and 8 doing a good job keeping you in it. All right. Nice up day. A little bit of wick at the top. Love the earnings per share. Love the volume. It is a lower dollar stock, which doesn't exude a lot of volatility, unlike a lot of other low dollar stocks. I like this stock. If I'm going to get into it, though, about 5 cents higher than the high to make sure I'm buying into a rising stock. No matter how much you like a stock or think that it's going to go up, make sure you've got confirmation of buying in as it's rising. Because if you bought now and this is a good level of resistance at the high, what do you think is going to happen? The stock's price is going to get to that level of resistance and pull back. All right, that's why I'm saying make sure you go higher than the high before you pull the trigger on that stock. All right, let's go to the next stock. Woo, TMP. Now, the cool thing about TMP is this could be a possible regression trade. Look at that stock fall, find a level of support, and bounce back up. Now, this would feel more appealing to me if this was a green bar moving up and the 3 and the 8 had crossed. But it looks like it bounced. That was a little bit of a hammer, almost a hammer, showing a possible reversal, but man, it stalled out real quick. It stalled out real quick. All right, stop it, Trade Shark. All right, earnings is higher than it was 3 months ago, but it is pulling back. Be careful with that. I do like the regression, the bounce, but I don't like the quick stall out. All right, let's go to the next one. Southern Company Utility. Man, look at that move up. Look at that move up. Does anybody know what that candlestick pattern right there is known as? That is known as a bearish harami. And follow through would have been this day, not this day, but this day. Excuse me. That would have been a good time to get out of the stock. That would have been a good time to get out of the stock prior to writing it down. But guess what? It's starting to come back real quick. It's starting to come back real quick. Earnings is about this, it is higher than it was 3 months ago. I like the open candle. If you want to jump it now, Keep in mind, that would be your profit target sitting at about 71.10. Not a lot, but that would be your possible profit target because that is your formal level of resistance right now. Let's go to the next stock real quick. SBGL, sideways move. There's the level of resistance. There's the level of support. Gold is not ready to take off yet, no matter what nobody tells you. It's not ready to take off yet. Now, I did see that the stock's price went up. A couple of gold stocks did move, but not the whole industry. Right now, this stock is in a channel. Nice open candle today, a little wick at the top, a little bit of give back. The 388 did cross, but where's it at? It's having a hard time getting past that level of resistance. Next stock, Dick's Sporting Goods. Man, it went up, it went down, and moving sideways all around the town. Look at that. Excuse me, not ready to touch it yet. It's not showing me anything. It's moving sideways in a channel within a bigger channel. I'm not ready to touch it. I love the earnings per share. I need some confirmation. I need it to break through some level of resistance before I jump on board with it. I'm not ready to touch Dick's Sporting Goods just quite yet. All right, not just quite yet. Next stock, Light. Lumentum Holdings. I like the quick jump in the stock. I do like that, but just quickly, again, as quickly as it can go up, as quickly as it can go down. This is a $90 stock, though. Let's go through earnings. Was this an earnings play? Here was the earnings on the stock, was on 2/4 of 2020. So this was an earnings play as the stock went up. All right, maybe could be starting to take a little breather now. That is a shooting star pattern. Could be a possible reversal, bearish reversal. Just keep your eye on it if you're in it. If you're in it, keep your eye on it, all right? If I get a shooting star pattern with a follow-through of a down day tomorrow, that might be a great opportunity to take your profit so you don't give it all back, all right? So that you don't give it all back. Let's, Andrea bought at the top. I'm sorry, Andrea. All right, sorry about that. But you know something, this is a learning experience. Hopefully, if nothing else, as you look at the stocks that you've given me, you at least get a better understanding of what you may have done that could have affected you not making money in the stock. That's what I'm doing, and that's why this is a quick fire session to take the stocks that you like. All right, Trade Shark, Light is an Apple supplier, and I would still be careful with it. I would still be careful with it. Remember, I don't care what any of these companies do. I'm playing what the graphs look like. You know why that's important to me, Trade Shark? Because the graph is the DNA behind the stock. The graph is the DNA, and it tells a story. I'd rather, here's the story of a stock with moving averages who were going up and down with the flow. And if you don't know what you're doing, soon you will be out the dough. All right, so how was that, Joey? Joey didn't like that. All right, anyway, it is a story, and it is a story. I like that. I like that. That was awesome. You rock, sir. That's right. That's what I'm talking about. All right, so it doesn't always matter to me what the stocks do. All that matters is what I see on the graph. All right, let's go. Oh, did we do Delta? I think we did Delta. No, Delta's a little bit of a sideways move as well. A lot of jumping around. Just like House of Pain, the stock is jumping around a lot. Be careful with jumpy stocks because as quickly as they can gap up is as quickly as they can gap down. Look at that. All right, be careful with gappy stocks. Joey is, no, he's not. Leave him alone. LRCX. I like the stock. I don't like the little give back for the day, but overall the 3 on an end of day basis. And as the 3 pulls further away from the 8, instead of waiting for the 3-8 cross to the downside, I would play this stock on an end-of-day basis if the stock's price goes below the 3 to pull it off the table. All right? The further away the 3 and the 8 become to each other, I would most likely, instead of waiting for the 3-8 crossover, just use the 3 in and of itself. But right now, the stock is going up. Volume is pretty steady. Earnings are good. If you're in it, leave it alone. If I'm not in it, though, I would wait to see if the stock could go higher than the high. Next to last stock, Costco, moving up. Like the nice open candle on the last 3 months, hitting a new high. Love the earnings per share. Volume is pretty steady. I'll take it. If I'm not in it yet, I'd go 12 cents higher than the high. The stock recently became a buy recommendation. The 3-8 crossed back here. Beautiful entry. Still in it. Leave it alone. And the last stock is STM. STM Micro Electro. That moving up. Again, be careful with gappy stocks because as quickly as they can gap up is as quickly as they can gap down. $31.76. Volume is pretty steady. Look at the earnings, though. Good Lord, have mercy. Earnings, though, is at $1.25. It's still positive, but earnings have been flat. Flat. All right, hitting a new 3-month high. hitting a new 3-month high, a little bit of a wick at the top and the bottom, and the 3 and the 8 are pulling apart. I would trade that if I own it right off of the end of day 3. Whew! I got through all of your stocks. With that, I'm only 5 minutes over, Joey. High five. High five. Only 5 minutes over. I covered all of my stories. I covered all of your stocks. Guess what, folks? Hopefully, my new people that showed up here, and thank you, Trade Shark, for bringing your baby sharks here. I appreciate it. And all the other new people that came up, I hope that you got something out of it. And I changed this up on a week-over-week basis, not always the same stories. I think I'm going to do something a little different next week. I might look at the WOW watch list again. I think we're very close to solidifying a second day for YouTube Live. All right, I'm thinking, how close are we to that? We're pretty close. We're thinking about setting up a second day on YouTube Live. I just need to come up with the premise of what I want to do on. As a matter of fact, this is going to be a good thing. I want some insight from you. Comment, not here, but in the videos after Joey posts them. All right, because I need you all to comment, like, and subscribe. Especially subscribe, because our goal for subscriptions is 10,000. I'm looking to get to 10,000 subscribers. You do that, we're going to open up a VectorVest store. But when Joey posts these videos, I want you to comment on the videos on what you like to see in a second YouTube Live. All right, for what you would like to see in a second YouTube Live. I'm going to take some of your ideas. This is a good way for you to give me your input on what you would like to see for a second YouTube Live. So with that, folks, comment. And if you haven't already, subscribe. Trade Shark, get your baby sharks to subscribe. And not only that, if your baby sharks know people who are interested in the market, get them to come. Listen, folks, we're not that far from 10,000 subscribers. That is my goal. I want to see if you guys can help me get there, and I know we can. All right, with that, folks, have a wonderful day. All right, and I hope I hope big time that you guys have some semblance of some usability here, and comment on the videos, folks. Please do comment. I personally answer all of them, all right, as quickly as I can. So comment on the videos and make sure you subscribe. With that, folks, adios, arrivederci, ciao, au revoir, sayonara, see ya.